Welcome to the podcast, everyone. Today we're diving into the world of central bank digital currencies, or CBDCs, and exploring why central banks are eager to embrace digital currencies.
That sounds fascinating. So, what exactly is a CBDC in simple terms?
Well, essentially, a CBDC is just a digital version of traditional fiat money issued by a central bank. It's like you're holding digital cash that's backed one-to-one by actual reserves. Think of it as having your everyday money, but all on your phone.
Right, so it's not like Bitcoin with its volatility, but rather a stable government-backed version that promises speed and ease of use, correct?
Exactly. It's designed for efficiency, instant transactions with virtually no fees compared to the old ways of banking with intermediaries. And by using blockchain or distributed ledger technology, it makes sure transactions are recorded immutably.
Yeah, that sounds almost too good to be true. I mean, instant payments, lower fees, accessibility. It makes you wonder, is this really the future of money?
It might be a game changer indeed. Imagine a world where everyone, even those without traditional bank accounts, can participate in the economy using just a smartphone.
Right.
With CBDCs, we're talking about a potential shift towards a cashless society where the digital realm can really bridge financial divides.
Speaking of bridging divides, the idea of banking the unbanked comes up a lot. How does that actually play out with a CBDC?
So, the idea is that in regions where, say, physical branches or even basic banking facilities might be scarce, people can still have a digital wallet. Think of it as bypassing the bank altogether by using the central bank's digital infrastructure. This way, even someone in a remote area could receive government funds or even everyday payments without the hurdles of traditional banking.
That makes a lot of sense. I mean, now we see widespread online shopping, and digital payments are booming, like in the UK, where there was a significant drop in cash payments.
Absolutely. The shift to digital payments has been dramatic. When you see that over 80% of consumers were shopping online in 2020 and e-commerce sales are skyrocketing in the US, it really supports this move.
Yeah.
The natural evolution seems to be leaning towards a digital currency integrated into our everyday financial transactions.
So let's talk about how a CBDC actually operates. It sounds similar to your normal bank account, but what's the key difference really?
The real twist is using blockchain technology. You hold a digital wallet on your mobile device, and you can transfer funds immediately at super low cost. The blockchain acts like a secure, immutable ledger, ensuring that every payment is recorded and tamper-proof.
And this blockchain element also enables something called disintermediation, right? Essentially cutting out all the middlemen so that funds go directly from point A to point B.
Yes, exactly. Disintermediation means the central bank itself can transmit money directly to you, bypassing traditional banks, which often come with their own fees and delays. It's like streamlining the whole process so you don't have to wait for days or deal with extra charges.
Right. While that sounds promising, I do have a concern. Doesn't centralizing everything in one digital network also concentrate risk? If something goes wrong, say a glitch or even a security breach, the whole system could be compromised, don't you think?
That's a very valid point. With a centrally issued digital currency, the government really holds all the cards.
Yeah.
Any error or vulnerability might indeed have far-reaching impacts. And if system errors occur, the reputation of the central bank could take a serious hit.
And then there's the issue of privacy. With blockchain's transparency being a plus for security, it could also mean less financial privacy for everyday transactions.
Spot on. Regular blockchains are transparent by design, which is fantastic for verifying transactions. However, to address privacy concerns, central banks would likely use a permissioned version, distributed ledger technology, or DLT, which restricts who can see what. So, while governments gain a comprehensive view of transactions, they have to balance that with individual privacy rights.
It's like they're centralizing the decentralized model, keeping its benefits while dictating who gets to see the ledger.
Exactly. It's a fascinating blend. Governments can, in theory, access detailed economic data in real time, which might help them better manage monetary policy and adjust to economic changes with agility.
Right. Let's shift gears a bit. What about international adoptions? I mean, I know that places like China, Russia, Singapore, and even experiments in France have been mentioned as pioneers in this field. Can you shed some light on that?
Sure. China, for instance, has been really active since 2016 with the Digital Currency Institute and the digital yuan now available publicly in some areas. Russia is also rolling out a digital ruble with pilot programs involving multiple central banks. Singapore is building a retail CBDC, while France finished a 10-month experiment testing how a CBDC can streamline bond trading and more. Each case is a unique experiment in how to merge digital efficiencies with traditional financial systems.
It sounds like the US is still a bit more cautious, is that right?
Correct. Although there's interest and even endorsements from former regulatory chairs calling it a solution to slow and expensive payment systems, the US approach has been more measured. They're weighing regulatory and structural changes carefully before diving in.
Yeah. So, with all these experimental pilots, it appears that while the potential is huge, there are still a lot of challenges before we see mass adoption of CBDCs globally.
Absolutely. It's not just about implementing the technology, but also about addressing risks, like, for instance, governmental control over personal finances versus ensuring quick, accessible transactions. And there's the trust factor. Will people feel comfortable with a fully digital currency that the government controls?
And here's another point. Some might argue that relying solely on CBDCs could reduce consumer choice if traditional banks get sidelined.
That's a fair critique. With CBDCs potentially centralizing the financial ecosystem, you might lose some of the flexibility that comes from having multiple private institutions handling your money.
Right.
You know, it's like trading variety for efficiency.
That brings us to the pros and cons. On the plus side, we have efficiency, wider access, lower fees, greater speed, and even improved security against fraud and money laundering.
Exactly. And on the downside, the heavy centralization means more governmental oversight, potential privacy issues, and risk if the system fails in any way. Balancing these factors is going to be the key challenge for regulators moving forward.
Also, we can't ignore that such a digital leap may influence other economic levers, like taxation, international transactions, and even how monetary policies are administered.
Spot on. Imagine with real-time transaction data, governments could fine-tune economic policies more dynamically. It's like operating in high gear compared to the slower traditional model. But that also raises questions about surveillance and how much the state should monitor.
True, it's a tricky balance. And what do you think about the notion that CBDCs will replace cash entirely?
Honestly, most experts agree that CBDCs are more likely to supplement cash rather than completely replace it. People will still hold on to cash for various reasons: privacy, habit, or even in places where digital access is unreliable.
That makes a lot of sense. Cash still has a role, even if its usage shrinks as digital platforms become more pervasive.
Exactly. The idea is to enhance the financial landscape by adding a digital option that's secure, fast, and accessible without completely eradicating traditional money systems.
Summing up, it seems like CBDCs hold tremendous promise in modernizing finance and increasing efficiency, but there are serious considerations around control, privacy, and systemic risks that cannot be overlooked.
Precisely. As countries experiment with and fine-tune their models, we'll get a clearer picture of how CBDCs can transform economies while balancing innovation with security and personal freedoms. It's an evolving field and one to watch closely as the digital revolution continues its march.
Thanks for this deep dive. It's been enlightening to explore the benefits and challenges of CBDCs. I'm excited to see where this digital financial frontier goes next.
Absolutely. Stay tuned, everyone, as we continue to track these groundbreaking developments in finance.